Good morning, everyone, and welcome to this new session of the morning briefing. Let's do a recap, as usual, of what happened yesterday. In short, there was this gap opening at night, then closed during the afternoon, but essentially a day of, let's say, trading range. We are currently at the lower part, visually, speaking of this trading range. We can identify this BC3 level as the watershed of this trading range. At the moment, this is regarding the Nasdaq, of course. What can we say from a macro perspective? Today, there are no significant data. The issue and the focus are always two important factors: inflation and the trade war. Regarding inflation, yesterday, while in speech, a member of the Fed board, well, in short, turned out to be quite dovish in the sense that he considers this inflation to be transitory. In short, he hypothesized two scenarios, one with tariffs at 25% and the other with tariffs at 10%. In both cases, he sees this inflation as transitory, and therefore this gives hope for the future. From a point of view, as for the tariffs, in response to this war, China, just as it happened during Trump's first term in the White House, has shifted its supplies and service for the agri-food sector from the United States to Brazil. So everything related to beef, pork, soy, corn has completely shifted. They supply towards Brazil. During Trump's first term, this cost the Trump administration, if I remember correctly, about $61 billion in compensation to companies, to American agri-food companies, for this loss due to the change in China's supply policies. We will see probably this time the amount will be even higher. We will see at what data will come in. So it's always a very delicate situation to be monitored carefully. Returning from a technical point of view, as we were saying yesterday, essentially, even though with volatility that still remains quite high, even if decreasing compared to last week, we essentially experience a range day, so practically nothing happened. We can simply say that nothing happened. So everything we hypothesized yesterday with the levels, well, from to monitor, will remain absolutely valid even for today, because essentially we haven't moved much. This is the 4-hour chart still of the Nasdaq. As you can see, we're still there. So the areas to monitor on the upside are the first obstacles. These are 19.3, certainly 19.2, 19.3 for the Nasdaq, and then subsequently the 20,000 area. On the downside, obviously, to monitor this pivot here, which in short, given this nice recovery, so 18.2, 18.3 is definitely the area to monitor for potential bearish attacks. Perfect. Let's take a look at the standard of the pure. Obviously a similar situation here as well. In short, we are working right within the levels of the BC3 range levels, like the Nasdaq, just a little above 8W. So the situation, is still in step by, even here, if we look at it on a 4-hour chart, the situation hasn't changed much, precisely because we essentially experienced a range day, which hasn't provided indications for potential continuations or not. At the moment, the situation seems to be this. The level to monitor is always this one. Here, 5 to 520, 5 to 530 as the first obstacle. The next ones obviously are these here, 5,580, 5,600. In short, definitely it's the area where I expect sellers to reappear again to the downside, obviously. Let's monitor this PV here in the area of 5,080, 5 to 290 with SD2. So SD2, with this PV here. This is the area to monitor potentially for bearish attacks. Perfect. Let's move on to to the Dow Jones and this here. Yes, well, if yesterday was a transitional day, so basically we're still there. There were the quarterly reports. There was the quarterly report from Goldman Sachs, which exceeded expectations. So in short, the stock did quite well yesterday. Today too, there are other financials coming. In short, just before the opening, the quarterly data should be released, and well, then we start with luxury. And then it seems to me that from next week or in 2 weeks, well, we start with the tech companies. In short, there we will probably begin to understand more, to have some more significant indications. So let's say regarding the Dow Jones, well, we are monitoring this area here, which is around 41,000 that we had. We already mentioned it well in yesterday's morning briefing on the downside. Obviously, we are monitoring this entire area here. Precisely because this trading range was created even before on Nasdaq and on ES, which has been quite respected. And we'll see, well, if they continue to operate within this trading range, or if a direction will be taken with a breakout on one of the two sides, obviously, of the trading range. Let's look at the Russell. Here it is. Here as well. Well, quite similar situation. We are working in the upper part, let's say, of the trading range. Well, common probability. Well, if there were a breakout of the 900 area, it could easily lead prices to attempt an attack on the 1940 area. So with all these highs here and the RD2 zone, where probably there will be some rejection of the area, but there will definitely be some, because surely these highs here, well, see you next time. They will defend them. Well, definitely to the downside. Obviously, we are monitoring this area here, which is the 10870 to 1865 area. Certainly, the break of these levels could set things in motion. Well, even testing today's low levels, which then correspond to this entire area of lows. Here, absolutely yes, perfect. We still have to look at the DAX, which is somewhat stagnant, even though yesterday it also essentially had a trading range day. This morning, well, the stock markets have been open for about 20 minutes in Europe. And at the moment, I am recording this video while there was a good opening. Reals as well have already broken yesterday's highs, so a continuation is likely, perhaps even a retest before the BC3 levels, and then a continuation upwards. We will definitely see these highs around the 21,550, 21,150 area. And the area is a tough one to pass, which then corresponds to the area, well, of today's RD2 level downwards. Obviously, we are monitoring this level here, which is a BC3 level 21,000 to 21,990. Well, the break of this level could certainly provide room for quite a broad bearish movement. Okay, we still have to look at, obviously, the oil. Here it comes. Here it is. It has recovered a little bit. It's working above 61.50. Which is an important level. So working above this level could certainly set the stage, obviously, with a push that might come from the stock markets to potential tests of this area of 64, but this is 62.60. It certainly remains important because it corresponds to this area here, where there are also good volumes, as indicated by the VLC indicator. So absolutely, the RD1 needs to be monitored. The break of RD1 could certainly set the stage, first of all, for a test of these highs. Here, therefore, in correspondence with RD2, whose break would comfortably lead the means towards the 64 area, which then corresponds to the area of the highs on the downside. We obviously monitor this area here. In short, it also seems quite evident from a bar chart perspective. 6080, 6050. In short, is the area to monitor. With this type here, we also look at gold, of course. In short, yesterday it pulled back a little after having recorded, let's say, this triple top between Friday and Monday. It pulled back a little. Now it's trying again. We're still working on the highs, a discussion that has been going on for a while. We also mentioned some investment cases that project this asset to 4,500 by the end of the year. We'll see. I don't know on what basis they conducted these studies. They surely know more than I do. At the moment, for the day, we are working within the BC3 levels above RD0. So there is a bit of an upward recovery. There could also be a test of this level here, 3.2 and 30, which then corresponds to this entire area of lows here, and then to these two highs here that were the first two rejections. So a new test of this area could easily happen, thus with level H. The HW level and these BCHI levels could certainly be a good test for a potential upward continuation. Obviously, breaking this would definitely lead prices to a test of these lows here with a possible case of breaking. The SD1 level, which is this one we see below SD1, could also lead to a test of the 3.2 area at 390, because with the volatility that we've been witnessing here in recent days, anything could happen, but even if the points are quite perfect. That said, let's also logically look at SPX, which experienced a range day yesterday. We are still there, close to this level that we have pointed out time and again. We need to wait because, in short, the situation is on standby at the moment. Perfect. We have reached the end of this morning briefing. As always, I invite you to leave a like on the video. We'll catch up later in the chat. Thank you all for your attention.